Oil prices are increasing again and expected to remain high due to the war in Ukraine as well as the OPEC cuts in oil production. In this video today, I'm going to share with you 4 cheap energy stocks that can benefit from this trend. Hi everyone, James here. Welcome back to my channel. Before we begin, I will appreciate if you can help me tap the like button and subscribe to my channel as I'll be coming out with more such videos. In return, I'll be showing you a financial meme. Without further ado, let's dive in. The past year has been a good year for energy stocks. If you look at the chart over here, you can see that crude oil prices have more than doubled from $40 per barrel in August 2021 to $115 in June 2022. And that said, right, the sky-high energy prices have come down in response to the looming recession risk. However, the prices have rebounded again recently due to the escalation of the war in Ukraine and how OPEC have sided with Russia to cut oil production. With OPEC announcing that it will reduce the collective output by 2 million barrels per day, many analysts are raising crude oil prices targets to above $100 for the first quarter 2023. Even not for the recent macro events, many analysts have already mentioned that oil prices will likely remain elevated in the near term because of the under-investment in fossil fuels. This all points to a beneficial flow for energy companies, and we will share with you 4 such oil and gas companies that are now trading below 10 times PE. The first stock that we're going to look at is Occidental Petroleum, listed on the New York Stock Exchange. Okay, the first stock on our list is Occidental Petroleum, also known as OXY. It is an international energy company with assets in the US, Middle East, and North Africa. It operates through 3 main segments. First one is the oil and gas, where it is one of the largest oil producers in the US. The second is OxyChem. It is a leading manufacturer of basic chemicals we use in our daily lives and a significant cash generator for the company. The third one is Oxy Midstream and Marketing, where it trades and transports the oil and gas assets. They also have a subsidiary called Oxy Low Carbon Ventures, which is advancing the leading edge technologies that grow their business while reducing emissions. Next, let's look at their financials. If you look at the blue and teal color, which is the revenue and the earnings lines over there, they have been steadily growing until 2020, after which it plunged due to the slump in oil prices. But as of last year till now, it has rebounded very strongly, and as of June 30, 2022, it has been a record high since 2016. So revenue came in at around 33 billion and earnings came in at around 10 billion, which is translating into a 30% profit margin. And their free cash flow is also at a very impressive amount of 11 billion. Next, let's look at their valuation. If you look at Occidental Petroleum, it is trading around 5.9 times PE ratio. This is very cheap as compared to peers like ExxonMobil of 10.5 times, Chevron 10.6 times. And this is also much cheaper as compared to the industry average of around 11.2 times. Next, let's look at some of their developments. First of all, Berkshire Hathaway now owns more than 20% of Occidental Petroleum. So it is conceivable that it could purchase the whole business outright. Next, CEO Vicky has committed to increase shareholders' return of capital by doing share repurchases and to grow its dividends in year 2022 onwards. The second stock on our list is also listed in the US is ConocoPhillips. ConocoPhillips, also known as COP, is one of the world's leading exploration and production companies based on both production and reserves, with a globally diversified asset portfolio. As of 2021, it has proven reserves of 6.1 billion barrels of oil equivalent and produced 1.5 million barrels of oil per day. Looking at the financials, it has a similar pattern to that of Occidental Petroleum, where revenue and earnings have increased from 2016 to 2020, where it slumped to low in year 2021, and after which it rebounded to a multi-year high of revenue and earnings in year 2022. More importantly, if you look at the profit margin, it has a 23.8% profit margin, and free cash flow has also come in at around 15.6 billion for that year itself. Next, looking at the P ratio, ConocoPhillips is trading at around 9.2 times, still cheaper as compared to peers like Pioneer Natural Resources and EOG Resources. It is also cheaper as compared to the industry average of 14.2 times. Next, let's look at the developments around this company. First of all, it has acquired Shell's assets during the oil and gas recovery in year 2021. So this may lead to an increase in the production as well as the bottom line in future. Next, it has also a recent partnership with Qatar to export LNG natural gas to Europe. As you all know, Europe is suffering from low inventory levels because of the Russia's curb of the oil and gas exports, and so this is a pretty significant development, because if ConocoPhillips is able to partner with Qatar to export this LNG to Europe, this may be a significant deal going forward. For our third stock, we will go to our local Singapore exchange, and this stock is REX International. REX International is an oil exploration and production company, and de-risks its portfolio by using their proprietary REX virtual drilling technology. This can detect liquids in the subsurface using seismic data. And since the IPO in year 2013, the group has achieved 4 offshore discoveries, 1 in Oman and 3 in Norway. And it has also become an oil producer in the past 2 years. Looking at the financials, alright, the revenue has been accelerating since year 2020. One part is due to the high oil prices. The other part is that it has transitioned from exploration company to owning the oil and gas assets that it has discovered from the oil fields, and that lead to the production of oil, which it has been able to translate to higher revenue and earnings in the past 2 years itself. And from what we can see, alright, although the earnings have come down a bit in year 2022 due to some restructuring of the assets and maybe some repairs going on, but free cash flow has been on a uptrend, and right now coming at around 87 million. So that is around a 30% from that of their sales revenue. Next, if we were to look at REX International PE ratio, it is significantly more affordable as compared to their peers. For example, Baker Technology of 8.6 times, or Dynamac of 32.7 times, or even the peer average of 18.1 times PE ratio. REX International is only trading at around 5 times PE ratio. Next, let's look at the developments around this company. there have been 2 independent directors buying back shares in the month of September. Okay, and the management has committed to pay half a cent per share quarterly. So that will total up to around 2 cents dividends per year. And if we were to use the current share price of around 25 cents, that would give around 8% dividend yield. The last stock on our list is none other than Sembcorp Industries. Sembcorp Industries, also part of the ST Index, is a leading energy and urban solutions provider. It has a balanced energy portfolio of 16.6 gigawatts with 7.1 gigawatts of renewable energy capacity coming from sources like solar, wind, and energy storage globally. Looking at the financials, the revenue and earnings have been going up and down in the past 6 years or so. In particular, the sales revenue has came down sharply from 2019 to the mid of 2020. However, it has rebounded and growing sharply from 2021 onwards, and actually now the earnings have reached a multi-year high of 710 million for year 2022, and free cash flow has also come in sharply increased to 993 million for the year itself. Looking at the P ratio, Sembcorp Industries is trading at around 8 times P ratio, where their industry average is around 15.7 times. If you were to compare to global companies like National Grid, NYSE, Black Hills, which are all utility companies, they are all trading at around 14 to 15 times P ratio. This means that Sembcorp Industry, which is trading at around 7.6 times P ratio, is around 50% more undervalued compared to their industry peers. And looking at their current developments, UK Prime Minister last week announced that the UK would cap average annual household energy bills at 2.5k pounds for 2 years, starting from 1st of October, in the wake of rising energy prices. This may hit Sembcorp hard because UK contributes around 8% of its total portfolio in UK itself. And next, if we were to look at their press release recently, the CEO announced a positive outlook, and they are focused on the shift from brown assets to green renewable assets. So there you have it, 4 cheap energy stocks, namely Occidental Petroleum, ConocoPhillips, Rex International, and Sembcorp Industries. They are all trading below 10 times PE ratio and churning out free cash flow due to the high oil prices. For more tips and advice on how to invest for the better, be sure to subscribe to our channel and hit the bell notification. What I want you to do next is to click on this video where I show you the step-by-step guide on how to screen stocks for free. Thank you so much for watching this video. I'll see you in the next one.